Palantir has been having a great ride so far, aiming for the $40 level in the short run after going through a $25 level that has previously been a major resistance. It has been one of the market's most amazing comebacks after a very long period of uncertainties, pessimism, and sell-offs. AI may not be necessarily, what's going to save the rest of humanity, or at least not yet, but it should turn the fortune of Palantir shareholders. The question is, should you be one of them? Hello everyone, I hope that you had an amazing day, lots of profitable trades, and a very good summer so far. So, in today's video, we're going to take a look at Palantir and see if it can make you a lot of money. As we know, over the past few years, things haven't always been great for us, the real people. Companies once considered as the go-to places, the holy grails for those looking for gainful employment, have been reducing their workforces, and it has been a traumatizing experience for those who have faced a very uncertain future. At the same time, the rapidly rising inflation has also been eating people's saving away in many parts of the world that have only known deflation for generations. When every assumption about the reality is getting blurry, we have to seize that opportunity to start, wake up and to work towards our own financial independence. One key factor to improve our financial situation is to spot the growth opportunities of tomorrow and seize the ones that may multiply our capital exponentially, increasing our capital available for later projects or later investments. Essentially, we need to find the golden goose, and for many, Palantir is exactly that. Over the past few years, much more than just another tech stock begging for funds in exchange of blue sky empty promises, it is a major player in a promising sector that may tell us a lot about the upcoming market appetite for risk and equities. If the tidal wave is ready to rise all ships, the company has enough reputation, prestige, and also expertise to arouse the market's curiosity, as well as people's tendency to follow trends. It is a company that people would often view equally as the risk appetite of the market alongside others, like Tesla or Nvidia. Palantir's reactivity to the macroeconomic tidal waves makes it a very interesting company to analyze and to perhaps invest in. In this video, we will take a deep dive into Palantir and to see whether it deserves to have a place in your portfolio. Before the video continues, I just want to take a moment to thank every single one of you for coming to my channel and hope that you will enjoy your stay and to come back for more content. If you like what you see, please consider to like, subscribe, and to check out my channel for playlists of companies I cover. With that being said, hopefully you're going to enjoy today's content as well, and let's get started. Over the past few weeks, Palantir has been able to climb to around $29 level at one point, reacting to the indirect and yet very obvious signals coming from the US economy. The stock has definitely resumed its trend upward, aiming for the $30 to $35. Of course, as we speak, it is having a bit of a little pullback to around $26, $27. But of course, in my opinion, it's a pullback and not really a reversal. So over the past few months, even if there wasn't a whole lot going on between the drift of summer trading volume and the previous attempts to sell off Palantir's share price, the stock's price action has been able to hold itself above the $20 level while looking for consolidation and recovery, with the rebalance of S&P 500 at the time, as well as doubts on Palantir's ability to keep its momentum and to maintain its growth rate in the public sector. These elements ended up being enough for many people to take profit at that time. Some may also believe that the short selling can be a good idea given the price action's pullbacks. At the moment, with the financial results scheduling to release for August 5th, there will be a lot of speculation about whether they will be able to hold the fortress in terms of price action. And this may also explain why some people have decided to pause their purchases in Palantir shares. Because of the nature of Palantir's shareholders, it has always been a stock made of momentum and a very large dose of anticipation, speculation, and self-fulfilling prophecy, instead of serious analysis based on actual facts, like numbers, financial statements, and so on. Just because its actual financial results may be decent is not going to be enough to boost its current valuation, or at least not in the scale we wish for. We can see that its widening scope has definitely grabbed the market's attention far more than anything else. And so far, the resistance turned support levels have been identified at $25, above which the new goals to surpass are $30, which supports levels between $20 and $23, providing some stability to its price movements. These levels serve as very important markers for investors, which indicates a lot of potential areas for the price reversal or continuation that are now been pierced through. So the short-term trends for Palantir stock appears to be bullish, and so is the case for the medium and the long run. The previous decrease in both interest and volume from investors are now old stories. Because remember, at some point, Palantir used to have 100, 200 million shares a day kind of volume. Right now, it's around 30 to 40 million, which, don't get me wrong, is still a lot. I remember when Palantir was trading sub 10 million shares a day. So, this is why I would say that the picture overall still looks good. And on a more fundamental level, Palantir has always gathered a lot of interest for retail investors to look up, and for commentators to talk about, and for YouTube channels to make videos about it, myself included. It has a lot of retail shareholders and, just people who are curious try to get in the game. If anything, this might be one of the potential weaknesses for Palantir's long-term outlook. The fact that institutional investors have yet to own the majority of Palantir's shares can be a sign that, despite its solid business model and good numbers, Palantir might be perceived to be expensive per the industrial, the industry standards or the institution's standards. This increased presence of retail investors also explains why Palantir is known to be a very volatile equity. Ever since its, trading in the secondary market, that sentiment has always been very reactive, with investors always want to follow any sort of trends that they think is beginning, including with the company's innovative data analysis technologies on the way up, and the doubts about the tech sector overall, including the doubts about the CEO on the way down. So its journey has been characterized by intermittent changes of moods. And this is why I would say that it's an interesting stock to trade, and it's sometimes a little bit frustrating to own it for a prolonged period of time. So one significant aspect of Palantir's price movement is the correlation between its fundamentals and the news cycles. Events like geopolitical uncertainties, supply chain issues for large economic sectors, interest rates, government regulations, and so on are all going to have some kind of impact on the share price, and also simultaneously been affected by the company's own news regarding its financial performances and guidance pricing from analytics. So, on the other hand, the relevance of analyzing news, I'd say it's limited, useful but limited. It's often observed that news surrounding the company is closely reflecting its price action. So leading to a self-fulfilling prophecy scenario, because you're basically describing what happened before and trying to find any sort of reason around it. In fact, it might not be able to predict the trend, but it can tell you what the trend actually is at the moment to confirm your own assumptions. So this can be very useful as well. Now, as things currently stand, it has been able to maintain its bullish trend in a very uncertain market in the short, medium, and long run, with diminishing margin increases at times, and sometimes we also have pullbacks. The stock has shown resilience in recent sessions, and the pace of the ascent, I would say, has definitely slowed a little bit. So, another factor that may influence Palantir's future is its status as a large cap. A lot of companies only buy large caps, in other words, blue chips. So it is poised to have like a strong position amongst the market leaders, and this status can bring additional institutional interest in the long run, which can contribute for further upside potentials. Now, with that being said, in terms of financial performances, this is definitely one of Palantir's very strong suits, but it's only enough to keep the stock above a certain threshold. It has already been through a period of massive sell-off back in 2022, and the rock bottom can very well be sub 10. With that being said, it's definitely something to keep an eye on, and the key levels I tend to look at are the cash levels, the gross margins, and the growth. So the cash levels will tell us if the company is in trouble and if it needs, cash injections by diluting the shareholders. The gross margin tells us if the business model is a good one, because if you give itself enough time, and over time, it's going to have the opportunity to scale up, and then for sure you're going to have like a company turning a profit. The growth plays a lot more in purely like the price action perspective of things. It's not something that, in my opinion, should matter that much, but it does matter a lot because Palantir is especially known to be a government contractor. So if they don't have this kind of thick layer of public sector money on top, then it's going to have some major impact on the company's valuation. So this is why it's important. And we have to look at not only the overall amount of money made from public sector. This may increase on a year-to-year basis, but if the growth of that amount slows down, then we may have some sort of trouble as well. Given its symbolic and size-related significance, I would say that if you want to invest into Palantir, it does come with its own pros and cons. There are different levels of considerations that may ultimately affect your decision of if you want to, put down your own money on the table and to buy Palantir. One of the main reasons why Palantir is a lot of people's is on a lot of people's mind is because it has growth potential. It's often considered by the market as a leading player in the data analytics sector, and Palantir operates in a field with a lot of promise for the future economy. Because businesses in the future are going to rely more and more on data-driven insights to make decisions, and in that regard, Palantir is very well positioned. It also has expertise in handling and analyzing large quantities of data, which stands to benefit from the growing demand for data-centric solutions across various industries. Its own financial stability is also a reassuring factor, especially if institution money wants to move in. Because unlike many other tech startups that operate at a loss for many years, Palantir has already established a revenue-generating business model, and this reduces the likelihood of share dilution through frequent fundraising rounds, providing investors with a sense of stability and confidence in putting their money in the company. So, additionally, Palantir has demonstrated its capacity to read the crowd. Okay, so its ability to capitalize on popular trends to generate a lot of interest in the market, especially amongst retail traders. The strategic move has basically enhanced its visibility and appeal, and the ability to capture the market sentiment and leverage that phenomenon to its own advantage also further underscores Palantir's potential for growth and success in the long run. Now, investing into Palantir, of course, also comes with its own risks. And one of these risks is its exposure to the public sector. Because remember, public sector has deep pockets, has almost like guaranteed cash flows and payouts. The problem is what cannot be guaranteed is that like their decision on keeping you or not is solely relying on like public information. If that is the case, then there will be nothing to worry about, right? Public equals like private. But it's not. And sometimes you may have a senator here, a congressman there, who will vote into limiting how much money and how long can the government keep its like its consultants or vendors on the payroll. So if that's the case, then at some point in time, at least some of the departments that Palantir is currently working for, or working with rather, are going to say, you know what, it's been a couple of years, let's change to somebody else just because. Okay, I hope that it will never come to that, but it wouldn't surprise me if it does. Another one is the potential for legal risks. Remember, they work with data, something that can be farmed or harvested illegally. If there's any sort of problem, I'll say that if the title ever reads something along the lines of Palantir is slowly vampirizing our own privacy or stuff like that, then it could be a pretty bad thing. And all the goodwill, all the brand power that has been built could go to waste. And another one is shift in narrative. Right now, AI is popular. Who knows if it's going to be popular in 20 to 30 years, right? What's going to happen then? If Palantir was a $15 stock and then it went to like almost 30, it's mostly thanks to AI, right? Is it possible that it may go back to like 15 if AI is no longer very popular? And then at this point you might ask, yeah, but I mean, why would AI not be popular? Because the market's consensus on if something is popular and something should be brought up as popular changes over time. And this is why I would say that this risk is very real. If people start losing interest towards Palantir, is it possible that their interest will be, along with their money, will be parked elsewhere, thus reducing the share price of Palantir? So these things are stuff to consider. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility, as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, having said all this, what is or what should be my opinion and my recommendation on Palantir? My recommendation is to buy it, and to buy it for the long haul. And also, I think that if any sort of downward volatility were to happen, it's going to happen within the next 2 years. So definitely try to spread all your purchases equally over the next 24 months and keep your maximum exposure between 8 to 10% of your portfolio's capital.